Brent Crude that had fallen 1.2% and is around the $72 per barrel mark. This is the lowest levels that we've seen coming in since December 2021. Somat is here with more details of this, why the crude is falling as well. Somat, take it away.
Well, on a closing basis, if you see Brent crude prices were trading at around $72 per barrel, which was the lowest since December 2021. However, the 2023 intraday low is still at around $70 per barrel level. Now, why crude prices are trending lower? Firstly, it's the rising US crude inventories. US crude inventories are higher by around 5.2 million barrels compared to last week, and this is the biggest gain that we have seen in inventories since February 2023. Along with this, there is demand concerns. Global recession concerns has also led to crude prices or to a low of around December 2021. Now, along with this, there is a resilient Russian exports still coming in the markets and a stronger dollar. Now, usually stronger dollar makes makes crude expensive for importing countries. Now, if you see the Chinese manufacturing activity has also contracted faster than expected in the month of May. Now, PMI was down at around 48.8 versus 49.2 in April, and against versus estimate, if you see, that stood at around 49.4, and this is also one of the reason why crude prices have been trending lower. Now, key thing to watch out for when it comes to crude prices would be the next OPEC meet. In fact, the first OPEC meet of 2023, which is expected to hold on June 4th. Now, there have been mixed signals coming in from major oil producers regarding a cut. So that is the key event to watch out for when it comes to crude oil prices. However, this drop in crude oil prices benefits India because India imports nearly 85% of their crude requirement, and every $10 per barrel drop in crude prices narrows the current account deficit by around 14 to 15 billion US dollars, that is nearly 0.4% of the GDP. It decreases retail inflation by around 50 to 60 basis points and wholesale inflation by around 125 to 130 basis points, and also narrows the trade deficit gap by around 12.5 billion US dollars. When it comes to sectors and companies, for oil marketing companies like Indian Oil Corporation, BPCL, HPCL, Chennai Petro, and there is MRPL, the impact is mixed because lower crude oil prices does benefit the marketing margins, but then oil marketing companies do keep an inventory, because of which there could be some inventory losses for these companies. When it comes to oil explorers like ONGC, Oil India, Vedanta, HOEC, it's negative because oil is the key product, and lower oil prices means lower realizations, which could impact their profitability. Now, according to analysts, a $5 per barrel drop in crude oil prices impacts ONGC and Oil India's EPS by around 7% and 12%. When it comes to paint companies, it's positive because 40% of their raw material cost is oil and its derivatives, so lower crude oil prices would benefit their margins. When it comes to lubricant manufacturers, 50% of their raw material is related to crude. When it comes to aviation, nearly 40% of the total cost is fuel cost, so that is also beneficial for them. When it comes to tire companies, it's synthetic rubber, carbon black, and chemical. Now, these are all derivatives of crude oil prices, and lower crude oil prices means lower prices of these chemicals, which would benefit their margins. When it comes to cement companies, nearly 40 to 50% of the total cost is either directly or indirectly related to crude, and there is a host of specialty chemicals for them. Crude oil derivatives are a major raw material, and they will also stand to benefit because of lower crude oil prices.
Thanks so much for that, Somit.